Hey, welcome back. So every year people talk about how we're about to approach a bear market or that the stock market is about to crash. But is that true? With recent news like the Dow dropping over 700 points in a day or inflation climbing up higher than we expected, maybe one could be around the corner. Well, if anyone says that they can predict exactly when it's going to happen, they're probably lying. Although it is true that one will inevitably come. So in this video, we'll be talking about 6 ways that you can prepare for a bear market or a stock market crash. Hey, I'm Kevin, and on this channel, we talk strategies to help you along on your financial journey. So looking at my stats, it seems like most of you watching are not subscribed to the channel. So if you're enjoying this content, consider supporting this channel by clicking that subscribe button. And with that said, let's jump right into it. Real quick, what is a bear market? Well, it's a term that's used to describe how far down the stock market has dropped. A pullback refers to a 5 to 10% drop from the recent highs. Then there's a correction, which is at least a 10% drop in the market, followed by what we're talking about right now, which is a bear market, which is a 20% drop in the market. Then lastly, there's a stock market collapse, which I couldn't really find the exact number for, but that's probably within a 40, 50, or 60% plus drop in the market. So really all you need to know is that a bear market is pretty much a medium-sized drop in the stock market or a security. And although we know that one will eventually come, especially after a 10+ year long bull market, no one knows when that will be. On the other hand, no one really knows how long one will last for either. We can only look at averages, which says that on average, bear markets in history have lasted just under 10 months each. So first tip in a bear market is to avoid emotional investing. Especially during downturns, you're gonna see red everywhere every single day. So you really need to stay disciplined to make sure you're not making any mistakes, deviating from your plan, or making any rash moves. The worst thing you can do is sell a stock at a loss only for it to bounce back harder, even higher than what you initially had it for just a few days later. When you're investing, you should both have an entry plan, but also an exit plan in place when you enter the trade. That could be a price target, or some new knowledge that comes out, or maybe you had a theory and it's finished playing out. Have a plan and stick to it. Another good mindset to have is think for the long term, because in the short term, things could be really volatile going up and down. But on average, the market goes up and to the right over time. So if you just expand your horizon, things will be good. If you don't need the money now, then everything is fine. But if you did need the money at that time, then, well, that money shouldn't be in investments in the first place. Having something objective to follow also helps with the mindset and helps with taking emotion out of your trading, because then you can just have a plan and just execute that plan. Now, I say this over and over again, but tip number 2 in the bear market is to have an emergency fund set up. This cushion really helps you mentally because you know that you have a few months of expenses saved up in case things go south, like losing your job or having some unexpected bill that comes up. Especially during a downturn like a bear market, you don't want to have to stress about these issues coming up on top of all your investments and things already going down. An emergency fund should have already been set up before you even started investing, and ideally has 3 to 6 months worth of expenses like your basic necessities, food, groceries, and those type of things. Don't forget to adjust this fund as you need to. Maybe you started a family, or you need to support another person. You may need to change how much is in that fund. And once you have that set up, make sure not to use that for any real investing purposes. Just keep it in a high yield savings account, which will keep it liquid so you can draw from it whenever you need to, but also pay you about 0.5% APY, which is still miles higher than like the fraction of a percent regular banks give you. Next up, if you have the money, you could take advantage of a bear market by buying the dip. No, I don't mean trying to time the exact bottom, because you can't predict the future, I can't predict the future, no one can predict the future. But I mean just continuing to dollar cost average in as the price goes down. For example, if you bought stock A at $100 and then it went down a week later to $50 and you bought it then your average will be $75. Yes, you didn't get the absolute bottom of $50, but you still significantly lowered your cost basis while not having to try and time the exact bottom, which you'll likely miss. Because on the other hand, maybe you bought the stock at $100, it fell to $50, you thought it would keep going down, but it bounced back up to $100 or higher, then you missed out on the chance to even lower your cost basis. If the stock price of a company goes down, but the fundamentals and the thesis around your investment didn't change, then you can just treat it as a sale and buy in more of the stock. There was a study that found that over a 20-year period, if you miss just 10 top trading days, then your returns were cut by more than half. And if you miss the best 30 days, then you're in the negative. So even if you're trying to time the absolute bottoms, you could be missing out on the best trading days too. Again, having a system like this will really help you remove that emotion from your trading, as you would just be continuously buying in at set intervals and not letting your emotion take over. Tip number 4, whether or not there's much going on, if you're investing in the market or not, you can use this time to do more research and gain more knowledge. With so much information on the internet nowadays, with everything you really need, there's no real excuse to not learn and improve your own knowledge. I'm not saying give up your social life and go all in into this. Unless you really wanted to, that's okay too. But what I'm saying is just spend a little bit of time to up your knowledge on here and potentially gain a leg up on other people. This could be different types of investing, like looking at long-term fundamentals, swing trading, day trading, different types of investing vehicles like options, regular stocks, futures, or any combination of any of those things. The whole financial world is so vast, and I don't think anyone can really master it all, especially with so many new things on the horizon like crypto and DeFi, which is decentralized finance. There's so much more to learn and so many new things coming online that could be great investing as well. What better time to start learning than now? Alright, so in a bear market, when things are more unknown, you might want to consider de-risking some of your portfolio. That means paying off any high interest debt you have, things higher than maybe 5% or so. Imagine you had $5,000 in credit card debt and you're like, it should be okay, you have a full-time job. But what if a year like 2020 hits and you lose your job? Now you have the stress of needing to pay off some high interest credit card debt whilst also trying to find a job and get income to cover your basic necessities like groceries and just your basic needs. Not a good place to be. The other thing you can consider is consolidating your investments into only your very highest top conviction stocks. That means instead of having like 15 okay investments, maybe trim it down to 5 or 10 that you have absolute highest confidence that will do well. Yes, that also means maybe selling off that GME you've been diamond handing. Sorry, apes. And trying to diversify into higher conviction stocks. It might also be good to cut down on more speculative investments too. For example, very high growth stocks, SPACs, and things of that nature. Because those type of stocks are usually the ones that drop much further than the overall market and can really hurt your account. Lastly, number 6, one word: diversify. If you're in personal finance or investing at all, you've definitely heard of people saying to diversify your portfolio. Imagine being all in on the travel industry and having everything in a hotel stock. Then out of nowhere, a year like 2020 hits and your whole investing account is down 60, 70, 80%. Oof, that must hurt. And with diversifying, that doesn't just mean different stocks, but also different sectors and stocks and investments that are low correlation with each other. For example, if stock A goes up 10% and stock B always follows and also goes up 10%, those are very, very correlated. In fact, Bitcoin was more recently shown to have low correlation with the overall stock market, which could be why so many companies have been investing part of their balance sheet into it to hedge from all the money printing and all the other things going on in the markets today. Other types of investments you could consider are like real estate, because usually real estate isn't as volatile as the overall market, and especially if it's your primary residence, you don't really have to worry about the value and things dropping that much because you're not really trying to sell that in the short term. There's a ton of other benefits that come with investing in real estate, like being able to leverage what you have to gain wealth fast, or depreciation and other tax benefits you could have. That's probably why most wealthy people have a significant portion of their wealth tied up in real estate investments. So those are 6 ways that you can prepare and even capitalize on a downturn or a bear market. Remove emotions from your investing, build up an emergency fund, dollar cost average through the dip, learn and research more, de-risk your portfolio, and lastly, diversify. Remember, no one can predict exactly when bear markets or crashes will happen. But what we can be for sure on is that one will probably happen in our lifetime. So the best thing we can do is prepare. But what if you're new and you don't even know where to start? Well, check out my video that I go over how to start investing up in the top right corner and down in the description. Or maybe you're interested in the future of finance with crypto and DeFi. Check out my other video that I did on that topic in the same places up and below. With that said, thank you so much for watching. If you enjoyed the content, please like the video and consider subscribing to support the channel. And as always, invest safe and see you in the next one.